Hello, good afternoon. This is Arya, your finance group teacher. In last lecture, we already finished introduction of taxation, and we started in income from salaries. I have already shared screen for you. Just I go the correct page. In last lecture, we already finished residential status. This is income from salary. In that introduction, unit object, meaning of salary, computation of salary, income of employee, deduction of income from salary, allowances, exemptions, and exemptions. These are the these are the main elements of salary. Income. Salary is a remuneration received accrued to the individual periodically for the services redeemed as a result of express or implied contract. The the salary is simple word mean remuneration of the people which he has received from his employees for the reading, reading services to him. The exercise of the employee to employer to employee, the relationship is necessary for the tax particular receipt of the salary, but receipt for all kind of services rendering cannot be taxed as earned. The remuneration received by the profession like doctor, lawyer, etc. cannot be covered under a salary since it is not received from their employees but from the client as a taxation under the head income from business and the profession. The act make no decision between the salary and wages, though the generally the salary is made of non-manual work and wages are paid for the manual work. Salary is a taxable either on a basis of receipt and base of whichever manual earning. After that, they given the meaning of salary. Salary is the amount remuneration paid by the employer to the employee for the service rendering for the certain period of time. The term salary include remuneration in any form of personal services under the expect expansion or implied contract of employee. All the employees are received while rendering your services as a result of employee contract is termed as a salary. Factor to be considered in a taxable or any income of the salary income. From there must be the relation of employee and employee between the payer and receiver of the money. Salary is a taxable in the year of receipt. It is a year of earning and salary income whichever is earned. If the salary has been received first, then it will be taxable in the year of receipt. First, what get received be taxable in the year of earning. The salary income is taxable in the hands of individual only. No other type of person such as firm, HUF, म्हणजे Hindu Undivided Family, uh, can earn salary. Salary can be due from former employee and present employer. It in the previous year, whichever is paid or not, accordingly to the income from salary taxable during the year shall consist of the following: the salary due from the employer to taxpayer during the previous year, whichever paid or not. Means in short, when the salary is comes in your hand at that time, you must be paid this tax as salary for income. Salary paid to employer during the previous year before it become due. Uh, Arrear from salary paid by the employer to the taxpayer during the previous year. If, if not charged to the tax it early year, remuneration bonus and commission received by the partner from the firm is not taxable under the head salary. Whether it would be taxable under the head business and profession. So the gross profit, the gross salary is also the sum of total basic pay plus dearness allowance, house rent allowance, transportation, special allowance, and other allowance. Generally, salary is received after some deduction, such as combination to the provident fund, taxation deduction at the source, repayment of the loan, etc. Such deduction salary is known as a net salary. However, the taxation purpose to the salary is taken without this deduction, which are known as a gross salary. Hence, if the net salary is given, we have to add back these deductions and get gross salary. The word salary is broad term which include any payment or employee to employee, which include the basic salary, enhancement of the leave salary, advances of the salary, arrears of the salary, all allowances such as dearness allowance, entertainment allowance, house rent allowance, conveyance allowance, and also include the perquisites by way the free housing and free car, free schooling and children for the employee, etc. Such are the perquisites. So under section 17, the Income Tax Act 1961, there are following incomes which are under the head of salary. First, basic salary, wages, fee, commission, pension, annuity, perquisite, gratuity, uh, annual bonus, income from provident fund, enhancement, allowances, and award. So these are the all are come together in this head salary. Means under section 17, the income from salary. So they explain each type of country very briefly, which is basic salary. These are the fixed component in your pay. Take of the form of the basic of the other portion of the your salary, which is usually form of the large portion in your total salary. The provident fund combination is deducted as a percentage of the basic salary. Annuity, it is annual income received by the employee from his employer. It may be paid by the employer as a voluntarily an account of the constructual agreement. It is not taxable until the right of the receive same arrears. Next is bonus. It is usually paid once in a twice in a year. Bonus preference enhance whichever may be the name is 100% taxable. The performance bonus is usually like to your appraisal rates of your performance during the period. The base of company policy. The gratuity, it is the salary received for the individual paid by the employee at a time of his retirement or by the legal heir in the case of death of employee. Allowances are specified as usual paid by employer to addition to the salary. Under Section 15 of the Income Tax Act 1961, these allowances are taxable, including the few conditions where they are entitled to exemption.